Undeniable. COVID cases are falling. The vaccine uptake is rising. There's so much liquidity in the system, and the Fed is on hold for a long time. If I gave you all of those, you would come back probably and tell me unequivocally reasons to be bullish in the market. The only thing that counters that is, well, we've been up a lot, and we factored in a lot of the good news. So where does that leave us?
So first, in regards to everybody who you quoted in their cautious view in the market, at any point in any time, we've seen it over the last few years through the entire bull market. The market can give you 5 and 10% corrections at any point in time. And if you don't expect them, then you shouldn't be invested in the market because you're in the wrong game. So that's nothing new. There's one more bullish point, which you didn't mention, but it sort of dovetails with the Fed being on hold, is that the bond market believes the Fed. Take a look at the good economic news that we've had coming out. Take a look at claims today. 10-year yield is down. And we've also had, again, to being rational, we've also had some rationality return to the market in terms of taking those super high flyers and bringing them down and not revisiting them in terms of then looking for another major leg up. So to me, it's never about markets. It's about stocks. And I can tell you the PE or the price to revenue or the price to or EV to EBITDA measures in my portfolio are very benign relative to what the overall market is. Sure, there's one or two in there that may be overvalued, including how I think about it. But generally, I'm finding value out there and continue to stay in those stocks, continue to look to refresh the portfolio. I'm a little cautious. I do expect that correction to happen or that sell-off, but that's just a normal course of business.
No, I understand. But, Sarat, I mean, Courtney's view is very sane and sanguine about, just sort of where we are right now. But she looks at the big winners that she's had, ex-Walmart, which perplexingly hasn't really done much even over the last year period. Now, maybe she's owned it longer than that. But you look at the winners that you've had. You feel like, okay, maybe the market's going to have a little bit of turbulence. Is now the time to take some money off the table like Courtney did, or just say, you know what, I'll ride it out and I'm just going to keep what I like in the full weighting that I have it in my portfolio?
All right. I would look at it through the lens of look at your portfolio and look at the allocation. If you are, as Courtney is, if you're over allocated and these stocks are now a larger part of the percentage that you want in equities, absolutely trim it. I mean, this is the time to do it. And then the same thing would be, 6-9 months ago when equities were way below your allocation. But to Steve's point, and more to Josh's, it's time in the market, not timing the market. And stick within the allocation. What we're doing is when new cash is coming into our accounts right now, if I'm adequately allocated, I'm not running out to buy stocks because I do think, as Steve mentioned, 5 to 10% pullback at any time. And then also we're in earnings season. So earnings season, will give you some opportunities for some fallen angels. So I'm not trimming at this point, but I'm not really.
But I'm sorry, but if you think we could get a 5 to 10% correction at any time, then you would never be buying anything ever, right? The fact of the matter is, at least hold on, I'm looking at your notes here. I'm not deploying anything right now, is what you say. When clients give me new money, I'm not deploying it right now. So this time feels different than maybe another time would have. No? Am I reading that wrong?
Well, it only feels different if I'm underallocated. If I am not allocated according to their equity allocation, then I am adding to them. But for the most part, if people are, and most of my clients are fully allocated at this point, so I'm not really getting aggressive in getting to the upper end of their allocations.
Well, I go back to the what should I buy, Courtney, if everything is up so much, even though we've had a little bit of consolidation lately, if everything is still up a lot, that creates the problem of where do I look to buy anything?
Well, it's twofold, and I want to be clear. Hey,
No, go ahead, Courtney. I don't know what that was.
Okay, so a couple of things. So Josh is 1,000% right. I usually agree with him on a number of points. there is a difference between investors and traders, right? And so where are you buying? What are you buying? What are you holding on to? What are you selling, right? So when you look at some names that are pulling back, there are sectors and industries that I like. I've always got, you and I have gone back and forth on the banks. What do I love about the banks? I like those that have exposure to investment banking, to trading businesses. I like the exchanges, those that are in the market of moving money back and forth. And we've seen some pullbacks, some interesting ones, in some market leaders. I'm not going to tell you who those names are. You can do the work yourself a little bit here. But there are some market leaders that are significantly off their highs that if you can get in and buy and you have a longer time horizon, you're going to make money. Think about who has great leadership, who has a business strategy that you can get behind. Put those companies in your portfolio, and market leadership, of course. Put them in your portfolio and watch them work for you. You're going to possibly see some waves here and there that maybe you add to them. And that's what I've done throughout time in some of those names that you've even given me a hard time on, Scott, over the years. But they've worked, and they've worked nicely for me. And therefore, I am peeling back. I'm not out of Blackstone. I'm not out of KKR. For the exact same reasons I just mentioned to you. So if somebody wants to get in them today, I think you have every reason from a long-term perspective to be in those quality names that are knocking the lights out from an earnings perspective and return perspective on behalf of their clients and shareholders.